Welcome to another episode of Four Guys Talking About AI. I'm here with my good buddies, John Gerard, Greg Sterling, and Neil Polachek. What's up, guys?
Hey,
Yeah,
you guys.
Hey. All right. Big week in AI as always. Today, we're looking at AI from four different angles: ownership, perception, finance, and culture. Our first story is that OpenAI has reportedly offered the US government 5% equity stake as part of its restructuring. That in itself is just an extraordinary proposal. It raises a bigger question around whether AI companies are becoming so strategically important that they're starting to look at national as if they're national infrastructure instead of private startups. And also, is that a foreshadowing to whether we are in this bubble, and is this a tell for a possible bailout down the road? So we'll jump into that conversation. Then we'll talk about one of the biggest messaging shifts in AI as well. Just a year ago, CEOs of OpenAI and Anthropic were warning about massive job losses. And today they're emphasizing AI as a tool that helps people work better. It's a complete shift. It's not that we're going to replace jobs, it's that AI is now going to help people in their jobs. Is that because technology has changed, or because public opinion did, or because they're just about to go public? So we'll get into that. And then we'll also dig into a financial article that the Wall Street Journal reported on this week, showing that the AI boom may be making corporate earnings look stronger than they really are. Billions of dollars in paper gains from AI investments are flowing into earnings reports from Amazon, Alphabet, and NVIDIA. All of those companies inflated their earnings by 12%, all because OpenAI and Anthropic, they're investors in those companies, and the valuation of those companies lifted. So those three companies inflated their earnings. They did it legally, but is it real earnings? And is this also the tell of a bubble? And finally, we'll end on something fun, which is an AI-generated song about Puerto Rico. It's become one of the internet's biggest viral hits. This might be the first AI song that broke into the mainstream culture, not because it was AI generated, but because nobody really cared. They just loved the song. So let's get into it. OpenAI offers the government equity. So this is pretty wild offer. The first time that I know of where a privately held company that's about to go public is offering the U.S. a stake, a 5% equity stake in the company. Not something you typically see.
I think we should go to John Gerard because he's the originator of this item today. I mean, I
right.
can make a bunch of statements, but John's the one who wants to lead with this.
Well, look, as we were talking about beforehand, I am generally more interested in the technology and the wow moments in AI, and there's elements. I would call this boring but really important. Like that's what this is, right? So what's the big deal? Like OpenAI offering a stake in itself to the U.S. government. Well, I think a lot of people are speculating, probably correctly, that this is OpenAI's attempt to start diversifying the underwriting for its massive losses, right? So as we've talked about here before, up until this point, private investors have been holding the bag as it pertains to allowing OpenAI to sustain its massive losses, and there seems to be some fatigue there. I think based on the size of the business and the size of the losses, they sort of run out of folks willing to write big checks on the private side. So the alternatives there, as we've also talked about here, are public markets and the government. And what's interesting is I think through one lens you can look at this as, well, here comes the bailout. Is AI and OpenAI in particular critical national infrastructure that the government needs to step in to prop up, and I think you could make the case for that. On the other hand, it looks through a certain lens, kind of like what Bernie Sanders was talking about in terms of the government having a meaningful stake in these businesses. Now, in his case, he was talking about, hey, give us 50% of OpenAI, and in this case, OpenAI is saying, pay us a certain amount of money for a 5% stake. But those aren't too far apart when you sort of think about where that could eventually land. So so it's interesting. I think it is the evidence that we've been anticipating, that the capital markets and the private side are growing tired of financing these losses, and maybe the first signal that the government is going to step in meaningfully to make sure that these things don't collapse under their own weight.
Well, but what was Bernie's objective in suggesting that? Was that to take some control of these things?
His objective was, I think, to make sure to be able to offset the job loss or job implications of AI. So the idea was, hey, if this is going to have the dramatic anticipated impact on the labor markets, we need the government to own it, which is really the people to own it. So we need the people who are being displaced to have a stake in the thing that's displacing them.
See, and my suspicion is the people in this other deal are the people who are in the administration today. But that's just that's my cynicism coming through, that,
Yeah.
the people who've been raiding other companies are going to get a piece of it this way too.
Maybe that's true, and I think you're right. I think that at least sort of current political climate and current administration seems to be able, uniquely capable of figuring out ways to put money in their own pocket when
Right.
there's money flowing. I think even taking that off the table, while I think somebody like Bernie Sanders might look at this and say, "Oh, so you're looking for our money? No, I want this for free." I think in the end, the result might actually be the same. Like whether there's money being pumped into these companies and the equity is owned by the government, by the people, or it's a gift to the people, to the government. The end result would potentially be that the government owns, a significant stake in these things, which is actually very interesting. I don't know historical precedents for that. I'm sure there are a lot. It's a blank area in my knowledge or expertise.
Well, we owned part of General Motors for a while, didn't we? In that
Yeah,
deal?
that was during the bailout, and then they sold it. They sold the
Right.
interest.
So they and I think the government did well on that deal.
Yeah, they made money.
Yeah.
What Bernie's proposing is a one-time 50% tax on the stock of the biggest AI companies. And then with that stock, what they'll do is create a sovereign wealth fund, and the bill would apply AI companies to pay $200 million in annual revenue, which would sweep in OpenAI, Anthropic, xAI, and also divisions of Amazon, Google, and Microsoft. And the idea there is that it would theoretically create a pool of $7 trillion. Now, that number is contested pretty heavily. It's a very big number, but the idea is that it would create enough value to be meaningful, where the annual payout would be $1,000 per person in the U.S. per taxpayer.
Sort of like
So that's
what they
interesting.
did in
So the idea
Alaska.
is that this becomes a fund for essentially what becomes universal or
Universal.
UBI.
Yeah.
Yeah.
So that's
universal
fundamentally different than I had it wrong. So that's interesting, and maybe is meaningfully different than the government owning a stock outright.
I think these companies are perceived as critical infrastructure already. I mean, certainly that's the way China is treating them, and they've been responsible for really most of the economic gains that the economy has enjoyed over the last 2 years. If you strip them away, then we look like a very flat to sort of maybe even negative growth environment. And so I think that without acknowledging this, they're treating it very much like critical infrastructure. They're trying to limit exports to strategic adversaries, and this is I mean, Sarah Fryer, the CFO of OpenAI, talked about a government bailout a year ago, and so I think that this is a version of that. It's not exclusively that, but it ticks a number of boxes, I think, that we've been talking about.
It's also one thing to create a one-time tax on the stock of these companies, and it's a very different thing to say you are a 5% owner now in a
Sure,
publicly held
you're right.
company.
Well,
Right.
the current administration's running around screaming about socialism and communism,
But now
but
they're going to bail out
but the irony is that this is a flavor of that, you know?
Yeah,
It's
nationalizing it.
always capitalism on the way up and socialism on the way down. And
Right.
and the bailouts and all of that, right? And so this actually, to me, this is a tell. This is a little bit of OpenAI is over their skis and their expenses. They lost $38 billion, $38.5 billion last year, net loss. They're going public. They need to raise the money. They're overextended right now, and the demand is not as high as everybody's thinking. And Meta has overbuilt their data centers. So now Meta is creating their own version of AWS or Google Cloud so that they can provide that infrastructure to other AI companies. And so all of this is to say, have they overbuilt for now? Have they overbuilt forever? Is it just like a timely thing where they've overbuilt this infrastructure and then maybe down the road it will materialize and the volume will be there? We don't know. But there's also Moore's law with data centers that exists, and Moore's law indicates that they're going to need to buy new computers in, probably about 2 to 4 years to remain cutting edge. So that's great news for NVIDIA if you're selling chips, not great news if you're Meta or anybody who's building out data centers, because there's a very high cost with that. And that's all part of OpenAI's expense, is building out these infrastructures and these data centers and infrastructure.
But don't you have to build out that capital, that infrastructure so that when the demand gets there, you have the capacity? Because if you do
Yeah.
it the other way,
That's the theory.
you don't have the capacity. It's like the old wireless business. They had to build out the networks, even though they didn't have the demand to fill the pipes. And then eventually it caught up because it's a step function.
I'm not technical enough to make this argument credibly, but my instinct is that there's all this data center build out, and the technology will advance to the point where they are not needed, where there'll be a lot of on-device kind of processing, and the kind of capacity that's been built out will be unnecessary because
Idle.
of what?
It'll be idle capacity eventually.
Yeah, because people have to bring costs down. There's market forces that are demanding solutions to the problem of the AI cost issue, and that's just my instinct to this. That 10 years down the line, all this capacity that they anticipated won't be required because the technology will have changed.
And the speed of compression at the software level is much different than it is at the hardware level. Right. So early days of technologies uh, has typically bloated file sizes, bloated code bases that then evolve and get more efficient a lot faster than you are going to be able to build out data centers and the hardware to be able to support it. So I agree with you, Greg. I think that what happens is that there's the distribution of what you just said of the devices themselves handling a lot of the processing power, for one, but then also the compression that happens in the language itself, and the compression of token usage. That's how these companies are making money, is token usage. So if you have a better way and a more efficient way to be able to use tokens overall, you're going to have less processing power that's going to be needed at the data center level. So that's also a factor in, are they overbuilding right now, and is the demand not going to be as high as they think it will be? Don't know. Let's go on to our second story here. So along this line, the AI job narrative has changed, right? So Anthropic and OpenAI have both announced that they're going to be going public, and there's a noticeable shift in their messaging. Just a year ago, they were talking about how millions of jobs would disappear, and now they've changed their tune to say AI is a productivity assistant and helps workers do more. So what's changed? Is it the technology, the politics, the growing public skepticism? Somebody's got to pay for all of this AI stuff at some point. Jump ball. Who wants to grab that one?
I can do this very quickly. I think it's entirely PR. I think it's entirely PR. I mean, there was a report that was issued by I want to say Stanford, but maybe not, that was evaluating the real world impact of AI on job displacement. And they said the people that are the most vulnerable are kind of educated knowledge workers in the technology industry, mostly located in the Bay Area. And in fact, there has been, 200,000 plus layoffs over the last year and a half in technology companies, ostensibly because of AI, but maybe not entirely. But I think this is entirely a PR move by these companies that recognize they effed up in multiple ways, and they're trying to work their way back into the good graces of people because there's a huge backlash in certain pockets of the population, Gen Z in particular, but not exclusively. There's a lot of hostility toward AI, despite the fact that people use it. The usage and the sentiment are disconnected. And I think they're just trying to say, hey, we're not such bad guys after all. We're not going to destroy everybody's well-being and welfare. And, by the way, we're going to go public pretty soon, and we want investors to buy us. Investors are rational or semi-rational. They won't care about the backlash so much, in the same way that they won't. They're not like Gen Z, but I think it's a PR thing.
I would add like another possible twist here. I wonder if this is also a hedge around, you know what? We actually haven't seen AI able to do all the things we thought it was going to do. And so we're now going to rebrand it
Yes, I
as
agree with that.
the
Yes.
assistant as opposed to the replacement. Like,
Yeah.
is that's like this almost universal thing. Like, and it's, the Gartner hype curve. We're in the trough of disillusionment where it's like, well, wait a minute, where's the flying cars? Where's the
You're
code
There's all
agents?
the gains I was going to get out
Right.
of it.
Yeah.
And I think what they're realizing is you got to have humans involved in this stuff to tell these things what to do. And
Yeah,
you got to
kind of, because it's not working, because it doesn't work. And there's even evidence that it makes things worse for some people. So it's kind of I'm wondering if it's a big hedge.
No, you're totally right. I think what's happened is that the results on the ground have not been as good as what was expected.
Right.
And so a lot of companies have become disillusioned and unwilling to pay, right?
Yeah.
I'm not seeing the gains. I don't want to pay all these outrageous costs. And so they're trying to manage expectations. Hey, if you team a human and an AI tool together, that's where you're going to see the synergies or the gains.
I
Yeah.
bet
think
a
you're
lot
totally
of
right.
that. I bet a lot of this is coming out of the customer support stuff where it got really bad because it was all AI, and the companies were losing customers because of that. They actually wanted to talk to somebody. So now they're going to put those things together, and that might be a much better solution, is the two combined. But I bet a lot of that's coming from bad customer service, bad customer support.
Well, customer service and that kind of experience can very well be handled by AI. And so there are a lot of people in that category, but there are also a lot of people that are in much higher level jobs within these companies that the promise of AI was that it was going to be able to replace those people as well. And there's a lot of miscalculation around this because those people actually bring a lot more to the table than just task driven, kind of day to day. They've got domain expertise and knowledge of the rules of the broader market. And what they didn't expect when they let a lot of these people go is that a lot of that IP left with them, and the AI needs to be told.
Institutional knowledge.
Yeah.
Yeah. Maybe some of it is also those people at the top of these businesses realize if they could be gone too. And so they're sort of rethinking, sort of applying this thing to sort of universally do everything in a business. They're like, well, that means me too. So maybe there's some anxiety there too.
Yeah, Forrester Research reports that 55% of employers now admit regretting AI-driven layoffs. Forbes reports that 52% of HR leaders said rehiring began within just 6 months of the original layoffs. So there's a lot of I don't know, it's not It's not buyer's remorse, it's fires remorse.
It's part of a larger story about figuring out what AI is actually good at,
Yeah.
where it really plugs in.
Yeah.
Yeah.
Let's talk a little bit about the economics of this story regarding this professor. His name is Professor Bellion Wang, who is uh, he's a finance professor at the University of Florida. He's highlighted in a Wall Street Journal article titled "Earnings Forecasts Are on Steroids," and the key finding with this is that he calculated that unrealized gains from equity investments added approximately $69 billion to S&P companies in their first quarter earnings, inflating reported earnings and profits by 12%. So the biggest contributors were Amazon, whose stake in Anthropic generated 16.8 billion in unrealized gains, Alphabet, whose investment portfolio also contributed to significant market gains, and Nvidia also did as well. Together, these three companies accounted for most of the $69 billion boost. Um, so, really interesting dynamic that's happening here. Of course, all of those stocks have seen a major lift in the past quarter, and this is called other income for those companies. It's not actually cash, or it's not liquid income, but it is other income. Um, what do you guys think about this?
Just chiming in here, it's obviously a big deal. I would say, I think the typical investor and the markets at large probably don't make a big distinction between other income and operating income. Earnings are earnings. What's my PE ratio on this, on this company or the stock I just bought? Well, let me separate out other income before I answer that question. Like, that's not happening, right? I think there's a certain kind of a danger there. One thing I will say, when I first heard this story, when you guys were talking about it earlier today, I was like, wait a minute, depending on how much it's overstated, that could be disastrous. Now, 12% sounds like it's an important number, but it's not a disastrous number, at least in my mind. Like, if it was 50%, if 50% of earnings from the quarter for those companies came from these gains, that would be alarming in a different way. I wouldn't say this isn't alarming, but what I was concerned about when I first heard it was, gosh, is all of the earnings increase that these companies are showing that's sort of propping up what's happening in the S&P coming from these unrealized gains? And at least so far, it looks like it's not. And then the question is, well, how much further do these underlying assets in these businesses have to run? Like, if they're in a 3 or 4 or 5x from here, all of a sudden those unrealized gains landing on the earnings column could tip the scales dramatically. But it sounds like we're kind of on the edge there to me.
Well, and if they have to mark them down, you get the reverse of impact, right?
Absolutely. Yeah. Which, you're right. That may be an even bigger
That's the
concern.
real risk, is that
Yeah.
they marked them up so they see this other income flow that props up the earnings. If those
Right.
assets have to be remarked back down, that's going to be, then they'll explain it away as that's not really income.
That's not real income. It's real income on the way up, but it's not real income on the way down.
Right. And I think that's the real risk for people who've got money in these things, is they
Yeah.
remark
Yeah.
them down. And there's what that.
It's going to be really interesting to see how the market reacts to this, especially when those companies go public, which should be sometime before the end of the year. So that's the timeline on Anthropic and OpenAI going public.
I mean, SpaceX is pretty far down as just a leading indicator, but that's a different company. But let's not
SpaceX is
talk.
a complicated deal, right? Because
Yeah, let's not talk about SpaceX. I'm sorry I brought it up.
no, that's fine. It's
Guess what?
it's noteworthy because they did go public, but their whole going public and how they managed to get their way
We only have
into.
we only have a few minutes for our fun
All right, let's get
discussion.
into the
So let's
fun
get into
story
it.
here. So this week, if you've been on TikTok or Instagram lately, you probably heard the viral song, the Puerto Rico song, and maybe the first AI-generated song to truly break into mainstream culture, not because it was AI, but because people genuinely liked it. You've got celebrities like Charlie Puth, Jennifer Love Hewitt, Luke Combs, all these people jumped on the trend and lip synced to the song, and so this is just like an interesting scenario where an AI generated song has really just made its way into the public zeitgeist, and now celebrities are embracing it, amplifying it, and it's just a new trend here. John, you brought this up
Yeah.
earlier. Tell us your story about this.
Yeah, so this was a funny one. So it has blown up about 30 days ago. It really popped, but it's actually had a lot of staying power. And it's this funny, very catchy poppy song about traveling to San Juan, Puerto Rico. It sort of pokes fun at Puerto Rico a little bit, but also has gotten enough traction that Puerto Rico's tourism board has contracted with the guy who put the song together to use it in their ads, which, by the way, opens up some questions about who owns the rights to this, since it was AI generated. I heard this first because my wife was watching something on Instagram. A friend of hers had forwarded that actually featured this song. What was really interesting to me about it was I could hear the AI fingerprint in it, and I was like, oh, wait a minute, that's a Suno song. Like it was clear to me. I think after you've heard enough Suno songs, you sort of start to recognize these patterns in them, even if it's subconsciously. And so that was an interesting moment for me, where as with so many other AI generated content items, the first time you hear, see, experience it, there's this wow, this was created by a machine moment. But after you see 10 or 15 or 20 examples or hear them, you start to pick up the artifacts and the things that are tells. And so that was an interesting experience. But the fact that this took off the way it did, so 116,000 videos on TikTok featuring this song, actually a pretty good streaming traffic for this song on Spotify. It's just sort of fascinating the way that it broke out. And I would say one other thing here that's interesting is, as much as people are rejecting pure AI generated stuff, when it accompanies something that's uniquely human or human creativity, it seems to be received in a different way. So this is a purely AI generated song, but the reason it took off was all these people taking the song and adding their own funny, video recorded overlay on top of it. So I'm wondering if that sort of starts to become a distinguishing, factor here, that AI on its own is skip, 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 as we talked about earlier. But when it is accompanied by or a co-creation with a human, it lands differently for us and can take off the way that this song has.
Well, the thing that strikes me is that it makes I think you're right. I think that's a key insight, but I think it makes the whole navigating the whole landscape of AI creative uh very tricky for companies. Very, very tricky,
Yeah,
because you can't predict in advance what's going to work and what's not going to work necessarily. And so somebody may make a big bet like Coke did on AI for its Christmas ads, and those fall totally flat,
yeah,
or something like this, which people love and they embrace. And you're going to have to do the really good version, and you're going to have to be really thoughtful and smart about it. And simply using AI because it's easier, faster, cheaper is not going to work.
yeah.
It'll
Yeah, I mean, and this, maybe this is just kind of, in some ways the way it's always been, which is that as a company, for the most part, if you're going to pull in external creative, you have to wait for it to be big, right? And then buy the rights to it. Like that, that's certainly been the strategy of a lot of advertisers when it comes to, buying the rights for songs or whatever it
For
might be for
music.
their ads.
Start
Yeah.
me up.
Underneath it, yeah, there's real creativity that needs to happen. We're seeing this a lot with AI video as well. And what's starting to emerge is this other trend of sort of like mini films that are being made now. Just the way that commercials are on TV, where they're, you're like, I don't even know what brand this is, but this 30-second spot is a story, and there's an
Yeah.
arc, and you find out who the brand is at the end. Um, that kind of trend is starting to happen with AI generated videos, where there these little 30-second or 60-second vignettes that are just a complete beginning, middle, and end kind of story. It's much different than your traditional AI slop kind of thing. And I think what we've seen here with this song is that there's the different level of creativity that's come to this.
And go listen to it. It's really catchy.
It's not the initial song, right? As John was
Right.
saying, it's what happened with the song that made
Yeah.
it resonate.
Which is in some ways the internet just doing what the internet does, right? That's the magic of the internet, and it's take this thing and go
Takes
run
this
with it.
and goes
Right.
with it.
Yeah, and off you go.
By the time it reached this mass audience, it had already been blessed by a lot of people,
Yeah.
whereas it didn't present itself as sort of a intrinsically valuable thing that it wasn't presumptuous in a certain
Right.
sense, like a lot of
Yeah.
AI creative is.
Which is also another interesting trend, right? There's this whole trend around clipping, this concept of clipping, that people are taking viral videos and clipping them and then wrapping their own content around it. And because they were viral before, they're now making them their own kind of viral traffic coming through their own channel, piggybacking on successful. So that's it's also it's an interesting recycling of content that already has liftoff.
It's this whole discussion is really a subset of this larger, when is AI going to be accepted by people and when will it be rejected? Like the earlier example we talked about many episodes ago of people liking AI creative and advertising, but then when they find out it's AI, they don't like it anymore. And we don't have to have this extended conversation right now, but I think about Meta with its new image creator. I think about the Meta AI glasses. Um, I think about AI content in Pinterest or in TikTok, and generally speaking, people are now hostile to that. It depends on the context, like this song, but there's a predisposition to be hostile and reject that kind of stuff. And so when you talk about using AI, it has to be done very thoughtfully, very judiciously, and with great taste or with great skill, because the damage to your brand could be quite significant if you do the bad version.
When we were talking about this earlier, I was thinking about how homes are staged now, right? When you sell your house, you get them staged. And people move in furniture and they paint the walls and they put up lamps and they put up stuff. And I'm thinking like, well, what's the difference? Why don't I just AI stage it, save a lot of money? And what's the difference? The viewer may not know the difference whether it was AI staged or physically staged.
Well, if it's a house, you have to walk through it and get a feel for it. And
But he's talking about looking at it online.
Yeah, I'm talking
Yeah.
about all the stuff that's online. I don't know why my image has frozen, but I'm
we can
still.
hear you. Yeah, we can hear you.
So I think that's a really interesting use case down the road.
Well, I think it's an example of what I'm talking about. So if you have a real picture of a house and you have an AI generated image of furniture in the house, then it's quite different than um, well, it is different than like features of the exterior being wholly AI generated. So, it's a question of degree. Like here's the living room. It's a real picture, and here's some furniture in the living room. Well, is that real furniture? Is that AI furniture? It's a visual aid in that context. But if you do radical AI modification to an image, so you do a sort of an AI makeover that misrepresents what the house actually looks like physically.
Or what it could look like, even.
Well, right. But if you're misrepresenting the house, that's a question of degree, and it's very different than putting a table in the living room that is AI generated versus some staged table.
I think it's going to be fascinating, though, because people spend a lot of money on that staging. It's a very big business, in relatively well-to-do homes.
But as Andy said, people ultimately want to see the house.
Yeah, but the image online that you save, you can go in and see the house and go, okay, those were images, and they can do a brochure that says this room could look like this. We're saving you money by not staging it.
And you're probably right that some people will choose to do that for the cost savings. But it's a question of whether the user feels deceived or not. Transparency, I think, really helps. If you say, here is an AI generated image of a scenario. This is what it could look like, or this is one decoration, one sort of decorator kind of scenario, versus trying to minimize the existence of AI or the role of AI, and then it feels deceptive.
Transparent about the inauthentic nature
Yes.
of something.
Yes.
I mean, think about that. We have
Yes.
to be transparent about how this is inauthentic.
Well, it's like the serving size or the serving suggestion disclaimer
the
that
box.
you see on the box.
Yeah.
That's right. That's right.
I
Exactly.
mean,
I think if people are told the truth, they will be more open
to
than
it being inauthentic. Yeah.
if they feel deceived. I mean, I'm gonna do a kitchen remodel at some point, and I've been collecting a lot of images off of Pinterest for ideas. And increasingly, what I've seen on Pinterest is AI generated or AI modified images. Now, in one sense, you could say, well, that's just a suggestion and it should be equally helpful to you. But my visceral reaction to that is to disregard that, get away from that, because I want to see real houses, real windows, real flooring, real countertops, and what people have actually done. And I don't want to see something which may or may not be possible because it's an AI generated image.
Some notes from the field on this, actually, now that we're digging into it, is that so my house was, it didn't burn down in the Palisades fire, but I did have to rebuild it, a lot of it. And in doing that, I had to put in a new barbecue up, in the space where the barbecue was. And so what I did was I took a picture of this really beautiful barbecue outdoor kitchen kind of vignette. Um, I put it into ChatGPT, and I took a picture of my backyard in the space, and I said, make it overlay it and make it look like it will look in my house. And I did that, and that was my image that I used with my builder to be able to rebuild the space that
Fire.
I now have there and all the items that I had to purchase for it. And so what it helped me do is kickstart that kind of blank slate that I had to say, I really like this. This looks good. I want it in my space, and be able to do that, even down to um, what were the cabinets going to look like? Who's the vendor of the cabinets? What was the barbecue going to look like? All that stuff was part of this original photo that I used to be able to then create my own version of it. And now it looks beautiful. I mean, it's amazing. So that was my sort of like blend of what we're talking about.
Well, but I think that's a good use case. That's a good use case because you were able to articulate to your builder, to your contractor,
What you
what
wanted.
you wanted it to look like. And so I
Yeah.
think that was a very good use case. You're not putting this up online and saying to somebody, "Hey, here is the house that you're going to come and buy." You're saying this is a design aid. It's essentially a design tool that you're using to help the contractor see what, understand your vision.
And we had to mock it up before we built anything, and built, just some 2x4s just out there just to kind of structure it out. And okay, is this going to fit in the space and all of this stuff? So, so you're right. And I think, Greg, for your, kitchen remodel, or for anybody who's doing any kind of building like this is a great use case for taking design ideas that might be in, really beautiful design ideas in a magazine or online or on Pinterest or whatever, and then dropping those into a photo of your actual space and having the AI do the stitching. It's a very cool experience there.
All right.
All right.
I'll keep that in mind if I can ever afford to do it.
All right, guys. Great conversation. Thanks everybody for listening today. We'll pick it up next episode. Thanks so much.
All right. Bye-bye.
Bye.